Thank you very much, Sean. Happy Wednesday, everyone. Thank you for joining us for another session of RM Smart Investing. Today's class will be something which has been very dear to me as far as experience goes. I've had a very profitable investing experience using this strategy that I'm going to share with you. And it's really simple, and it's focused on insider buying, which is the insider activity. And I will share with you my 7 criteria and what I look at as far as insider buying, and what the history tells us as far as the statistics with this success. So with that in mind, let's say the subjects that I'm going to cover in a short video will be, first of all, we don't want to mix up insider buying and selling versus insider trading. So when you think of insider trading, a lot of people think of the Mary Stewart, and think of these insiders, what happened, and she had to go to jail. So we want to differentiate that. Now, then we want to know what is an insider, who is an insider, and why we have to consider insider buying or insider activity. Then I'm gonna share with you my short 7, criteria in considering the insider activity, especially buying. And then how do we find out about these insider activities? And with that in mind, we go to the resources and I share some examples with you. All right. So first of all, what is insider buying and selling, and what is insider trading? So insider buying and selling is people who are close to the company. They're either in the management or, they're direct 10% ownership. They have these information, which is really public information. They are in the know, but they still, all the information, they get it, and they go ahead and use the activity to in the open market to either buy or sell something which is legal. For instance, again, a company insider thinks, oh my God, we've had a big drop, and based on what he or she knows, that this stock is undervalued. On the other hand, insider trading is based on a private information. And that's why we have this Chinese wall. And let's say somebody who's on the know, let's say from the legal department, or someone who knows as far as the research, or as an analyst, they know things are going on, and which is not a public knowledge, then that becomes insider trading, and that is illegal. Although for up to a few years ago, it was legal, especially in emerging countries. I remember even in 1980s, Switzerland was a big hub for insider trading information, just to share that with you. So what does that mean as an example? Let's say somebody knows, let's say again, about a lawsuit, or there's a merger coming up, and those are really hot issues. And, the insiders go ahead and, buy ahead of time, and that's, or sometimes they let other people know, the spouses, a brother, or the brother's wife, for instance, and then they act upon it, which is still illegal. So what is an insider? An insider is like any executive, any high-level manager, and then 10% owner of companies' voting stocks. All of these considered an insider, like the CEO of the company, the CFO of the company, the investor relations, the vice president, the president. So all of these are considered an insider. So they have access to a lot of information, obviously. Now, why do we have to pay attention? And I'm going to use insider buying rather than the insider buying and selling. And you shall see why, because we could do both. But in my opinion, what I found out that insider buying has been much more successful and given me much better results than insider selling. So in a study from the MIT Press, University of Michigan professor Nejat Seyhoun, he tracked stocks that insiders bought over a 19-year period. And then Seyhoun discovered that stocks outperformed the market by 4.5% following an insider purchase. Now, the stocks following an insider sale they actually underperformed the market by 2.7%. So the conclusion from the studies like supports the importance of insider activity. And again, I've been involved with this since late 1980s, and it really works. It just needs a little due diligence, a little research, which I will share with you some of the resources, and it just gives you that added edge. Sometimes it could be even the starting point, and then you can basically use your other indicators and some other due diligence and come up with very good candidates. Now, Peter Lynch once said, insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. Now, these are real money. These are in the market open, although there is sometimes manipulation going on, which I will share that with you. But other than that, majority of time, again, these insiders think there is something profitable is going to happen from their investing. So they go ahead and do that. Now, the reason I'm not emphasizing on the selling side, because as Peter Lynch mentioned, the selling could happen for college tuition, buying a house. It could be a messy divorce, or it could be any type of a reason for, again, the big purchases. So that could be many reasons. Plus, maybe somebody thinks negatively about their company. That would be part of that, but it's not going to be the sole reason. But the buying usually is optimistic view of the company. Now, there have been other studies done as well. So I want to share, for instance, one paper by Professor Carl Bettis and Don Vicky and Don Vickery and Don Vickery. They found that outside investors who mimicked the moves of insiders would have outperformed other stocks of the same size and risk by nearly 7% per year, even after factoring in transaction costs. In another study from University of Houston, Professor Richardson Petty and the Vakintish from the Office of Comptroller of U.S. Currency, they found that insiders to increase their net purchases up to 24 months before stock generates an above average return, which I will discuss that also in our criteria. Now, there is something called market profile theorem, which is MPT, and they use a ratio. They call it Brooks ratio. They look at the ratio of insider sales of a company by insider buys, the trades. They look at that, and then they analyze like 2,500 stocks. So you're looking at the totality of the market. And if the average ratio, for instance, is less than 40%, then they believe the market outlook is bullish. And if the ratio exceeds 60%, that's bearish. So although they're looking at the overall market, we can actually turn around and look at it individual stocks as well. So this is a graph from from University of Michigan study with Assam. We just discussed it. As you can see, once, this is the months before the actual insider transaction, and this is after, and you can see the buyers, they outperformed, and then the sellers underperformed, and that's what that 4.9% comes from. You can see up to about 11 months to 12 months. That's the outperformance. So I'm going to just dive in right now, and I will explain a little bit, and then we look at some examples. So my 7 criteria for insider buying. Number 1, I look at the size of the position. What size was that insider buying? Buying 10 shares, it's, unless, it's like Berkshire Hathaway A, is not really significant. So that's number 1. I like to have a large amount. And I also want to look at the source. Now, is the source, I don't want to see just continuously the CEO has just been buying its company over and over, and there's no other participants. And I put down the CEO shouldn't be an empire builder, because sometimes, especially in biotech or medical companies, it happens that CEO really believes in his company and just thinks that nothing can go wrong. And I will share a story with that. So the number of insiders. So I look at the the cluster buying. And what I mean by that is you want to have more than one insider. So when I say cluster buy, I prefer actually 2 or 3 minimum. Especially, I really like the CFOs. CFOs know the in and out of the numbers for the company. And because of that, they're not big buyers. They don't come into the picture a lot. But when they do, they usually have a good know-how. So, and of course, like the CEOs, I'm not too big on the directors, and especially some of them that they repeat the name. So I'm not as big, but they still play a role. So I use that. The other thing I also like, and you can add to that, is I like to see that there has been a big lapse within the time of the buying. So for instance, let's say the CFO and CEO, you don't see any buying activities for 2 years, a year and a half, and all of a sudden you see, oh, there is a new buy came in. Well, let's say you've seen continuous selling and all of a sudden a new wave of buying comes, especially as a cluster. And I think that's very positive, again, especially if there have been quiet times. So I will add that to the cluster buying. The third thing is I prefer not solely, you can look at all kinds of companies, but a lot of times the smaller and mid-sized companies become better prospect as far as looking at as far as insider buying, especially because the smaller the company, they know that company much better. But that doesn't mean we have to really ignore the large companies, which I will have a couple examples for you. It just tells me that if they know, and there's a cluster and there's a good size is coming, they know what's going on, they know of their plans, they know of their ambitions and all the projects they're going to do. So basically, based on that, I prefer, again, the smaller companies. The fourth thing is I definitely want to have open market transactions rather than option exercises, because when you screen, you see, well, a lot of activities are happening, and then you find out, well, there was some bonuses, or the options were, being exercised, and then because of that, they had to buy or sell something. So I'd rather just have fresh, open market purchases. The fifth one is I also like to avoid systematic small purchases by insiders. And what I mean by that is all of a sudden you see every quarter, like March 15th, religiously, the CFO, the CEO, the vice president, the president, the investor relation person, the manager, the managing in a marketing division. All of a sudden you see they're all buying like 100 shares, and they are exact same thing on June 15th again, and July and September 15th again. Those are not the criteria that I follow. So although when you screen, you all of a sudden you see a cluster buying, and all of a sudden you see a lot of activities, but I ignore that because it is not based on real sentiment. It's based on really like almost dollar cost averaging. The sixth one is I will encourage you to be patient. And what I mean by that, this is either you have to look back, let's say if you want to look at swing trading and you see what happened 5-6 months ago, or if there's a fresh buy today. First of all, the insiders, they cannot have any activity up to 6 months. So once they bought something, then they have to wait 6 months before they can sell it. So you have to be patient at least 6 months. And generally, a lot of things happen within the a year and 2 years. So you have to be patient because again, it's all about maybe they have the projects going on and the market does not realize it or recognize it. So just be patient. The seventh is you can marry these insider buying and then look at, for instance, either Sizzle Index, or look at maybe there's some unusual option activity with the months to come. For instance, there's something going on. And I found that also giving me an added edge. It's not required. It's not, again, it's like added bonus for me when I see that. When I see, like, for instance, something is happening in December and I see it's a large amount of options being purchased, or November or something like that, then that gives me confidence. Maybe there is a correlation. I want to add one more, and I call the 7+1 as the bonus. It is important to see when there is a big corrections, when there is a lot of crisis. You want to see what activities do the insiders, what do the insiders do? So, again, in time of crisis, they have become a very good telltale sign, or how and what do they think about these things, which I will share an example with you. So, first of all, how do we find out about these insider buying and selling? So, by law, insider buying and selling must be reported to the SEC, which is the Securities Exchange Commission, within 2 business days. So if somebody did something on Monday, they have to report it by Wednesday. And out of, once they did on the transaction. And typically this goes through SEC forms 3, 4, 5. And these transactions listed on form 4, which covers the majority of insider buying and selling. Now, these are available online on the SEC's EDGAR database, which is available. You can go and look at the EDGAR database, which is, again, you can just sign in and look at things. Now, there are other services which make your job a lot easier through screening, whether you want like immediate information. They just come on and say, well, there was a big buy this morning or yesterday, based on the information that they got, from the information that they had. So, and they are, most of them are free, but if you want to go really deeper, there are paid services which they report these activities. So let's dive in to check some of these resources, and you can, again, sample them out and see which ones you like. I have few, but I will share with you just some of them that, they're very easy and free, actually. So before we go specific to those barons, every Saturday when they come up with their publications, they look at something called insider transaction ratio. And as you can see, if it's a 12, the readings is under 12-1, that's bullish. So again, they're looking at the insider sell. So there's 12 sales per 1 buy. And right now, this is as of last Saturday, and just the 26th. That was, the ratio was 6. So that was bullish. And when they're over 20-1, right above this line, that's basically the sales to buys are 20 times. So that's bearish. And again, this is just one of the sentiments. You can put into your other sentiments if you like. So as of Saturday or Friday's closing, there were 308,614,000 to 50 million. So that was the ratio, and that's when it's above the 20. So we are, you can see it's 6-1, 308 divided by 50. So that's bullish. They also come up with, for instance, again, this is over the weekend. You have access to it if you like. It's the number of shares. So they have 2 columns. Number 1, they look at the biggest number of activity. In this case is the the PCT. So, and then they have the biggest activities in let's say in MP. As far as the dollar value, you can see it's the highest. And then they look at basically as far as the number of insiders. So they emphasize more of is there a cluster? And for instance, this NTX, ENTX is like $2.71. So the number of shares, 7,000, doesn't mean anything. That's why you have to do a little due diligence. And I'll show you how you can do that. But basically, there are a lot of numbers. So obviously, I like to have more expensive, let's say here, like Crocs has 5, and they were 36,000. There was like $3 million of worth of shares were, exchanged. So, and then the same thing with sales. Of course, you can see, for instance, Chevron, there were 15 number of insiders, and they sold $108 million. So these are the things that you want to accept it, because the price has gone so much higher. So they're taking profits. That's a normal human being or investors would do. So that's another reason I don't put too much emphasis on the selling side. Another good site that you probably mostly are familiar, Barchart. Barchart has very good charting tools. They also have the insider. They also have a good option, unusual option activity, so you can marry them together. They do have futures currency, so it's a good one. They do have a paid subscription, but the free ones are pretty good. You can have just a limited number of things you can do, or different searches you can do, but it's good enough. The other one specific for insiders, this is mostly, again, you have access to some free. There's a lot for the, if you want to subscribe, is the insidertracking.com, which does actually does United States as well as Canada. You also have TipRanks. This is a good one too. Again, you can actually do subscription, but again, the free, this could be your starting point. Look at these, and then you can do your search on your own. You can use Thinkorswim or TradeStation, or we can use Tastyworks, or you can use Finviz, for instance. So that's another way. Then we have the Open Insider, and that tells you, again, like for instance, they look at the latest cluster buys, and or they can tell you what was bought at what price. So, and you can actually choose your screening if you like. And then Benzinga is a very popular website for the information, and they have again very nice information as far as the multiple insider buys, insider purchases. So that's also available. So you can see there are quite few multiple resources you can have access to for free. This is one of my favorite market chameleons as far as like the option activities. It's very good. It has a screening. So again, you can see, you can go ahead and look at what is happening as far as the insider activities. You see they want to basically do subscribe to their premium, but all I need is I see some of the names, then I'm going to do my due diligence. And MarketBeat is another one I follow. So you can see US insider trading activity as of March 30th, and you can again do more due diligence. You see it's March 30th. The transaction date was March 28th. So it shows you what happened and who's been buying and who's been selling. Another very popular and very timely site is the Guru Focus, which really emphasizes more on the hedge funds and more of an institutional side, but also you have access to knowing, again, these are as of March 29th, who's buying and who's selling. So there's a lot of sells. So basically you can decide if you want to have both, but these are the fresh, it gives you what is happening. The next, which is most of you are familiar with, and I really like them, is the Finviz, and it's free. Of course, they do have a premium if you like, but there's a lot at the free side. So on the top bar, you can see, again, you have the home, you use the futures, and we can do the screening. So there's something called Insider, and with going through that Insider, you can filter it whether you want to use all or buy or sell transactions. I chose buy. And here also, instead of going for the latest trading, I want to look at the top insider trading. And I really kind of ignore the top 10%, even though not totally, but I'd rather go see what are the biggest, what happened in the past week or so, who was the biggest buyer. So you can see in ASPN, we had the director, he bought 135,000 shares at $33. It was 4.5 million. Right behind him, it was Ford, William Ford, which is the executive chair. He had 4.499, which is 4.5 million. So we want to take a look at that. So I want to see, first of all, the big volume coming in. And with that in mind, then I will also like to look at the cluster buying. So I will look at the top insiders, and I want to see, is there any repeat, like few names, like for instance, what you could see in Playboy, right? So there's 1, 2, 3, 4 names come out, and they were all buyers, and they were pretty good, number of shares. It's not like, $100. I mean, like you can see here, there was like 3 shares, or that's, but here we have good activities, and also you see there's good value. There's a CFO that interests me. I want to see what the CFO is doing, and then CEO and president. One of the things I have to say, though, it happens in smaller companies when they have the CEO, the president, the chief, and then the chairman of the board. They're all the same. It gives me a little hesitations, because again, I mentioned it's almost becomes an empire. So I like to have these checks and balances. So I'd rather have the CEO and president be separate, but it happens sometimes because of the need. It's not a negative, but also I'd like to have it separated if it's possible. But again, I look for these chief financial officers, if I can, to see if they've been active as far as owning their own shares. The other way you can use the Finviz, you can actually do it in screening. And again, Finviz has a very good screener. It's a good starting point. So for instance, what I wanted to look at, I want to look at companies who have the insider ownership of 10%. So there has been already interest in owning the company. And I like to see that in the past, they have been very positive, in this case, 20% insider activities in the past few weeks. So basically, based on that, you can come up, we had the 17 candidates. Now, I didn't do anything with the pricing of it. I didn't go like the S&P 500, like on the index, or you go to Dow Jones. What I want to do, I want to see every type of a company. And then I can look at and say, all right, based on that, it interests me to know, that's another thing, that if there's been some large short float, so these are the percentage of the shares that they're being shorted. So there's a lot of negative sentiment, and that should be part of my criteria. I missed out, but I look at the shorts, and I want to see if the markets are negative, but the insiders are positive, then who knows more? So in this situation, our candidate, for instance, is the Asana. It's a software company, so ASAN. And I see that there was insider transaction of 39%, but we have a high short float here. And the stock price is, there's a big average volume, and the stock price is about $43.99. This is as of yesterday's closing, or actually today's, I think not the closing, but yeah, today as of, actually, no, it was yesterday's closing. So basically, that interests me. So with that in mind, I like to look at some of the examples based on what we learned. So let me start with Ford. Now, Ford, we noticed there was a big insider coming, and you can see the insider transaction was 5.15%. Obviously, this is a $72 billion company, so we want to pay attention. Very much in a value company, with the forward P of 7.82. They do have a lot of debt, but they pay 2.25% dividend. So return on equity is 46%. So we want to look at what is happening, and you can see this is what happened on March 24th. Before that, I want to see if there's anything happened. We've had some option exercises. There was a sale, and it was about 3.3 million. So that gives me a little hesitation at 1785. But other than that, I would follow this. And I also noticed with Ford, he had done another 8.5 million buy in December 10th on $20.62. So I want to see some pattern and see if there is anything going on. So again, that's a big purchase, but there was a big purchase. And right after that purchase on December 10th, she bought at $20.62. Right around here, he had a big move, but that doesn't mean that he's accumulating. So, basically, after that, we've had a nice correction in it. So whether this is a time that we want to own Ford or not, just, if you've done your due diligence, you look at the technical side of things and you see the pattern is on the trend line, there's pretty good support, and we had this gap up, but we are under, we're hitting the 200-day moving average. If you can break above that, does that mean, well, there is some interest from the insiders, but mainly from the, obviously, one person. Then Playboy, we looked at the Playboy, and remember we had this cluster. It's been basing, as you can see. Now, the interesting thing is we saw that cluster, and we noticed there were like 4 different ones I'm buying, but the inside of transaction is negative 23%. So although the short float is still up there, that's 11%, but anything over 20% attracts my eyes. So we go back here and we see, yes, there was, a buy here and a buy here. And then we see, wait a minute, what happened? These people, he's buying it and then he was selling it here. So what gives? And is this like a pattern? So we've had a lot of sales. We had a buy, but the difference in the time is not that much. So what I would have liked to see, if there was a lot of sales for the last 2 years, and all of a sudden some name comes in and all of a sudden he starts buying large amount of shares, or she starts buying, then that interests me. So this is kind of a neutral for me at this time, although it is basing, but a lot of these sales are not really, don't give me a lot of information. Now, this is the Asana, the software company. So you can see there was a 39% inside the transaction, and then we had 24% of short float, which is the short ratio is like 3.26 days. So that means it takes 3 days of 5 million average daily to just have the whole thing turn over. Now, as you can see, we're looking at like a wedge. This trend line, we are under 50-day moving average, but it is this also could be a wedge right here. So this interests me. And while I look at this and I see, all right, well, there was some sale at this, you see the corporate secretary, but then we've had quite a few buys since February 2nd. So majority of it's from the CEO and chair. So the CFO had a sale, but then that was mainly because of the option exercise. So I don't put value on that. And then we had a little sale here. This is something you want to take a look at and do a little due diligence. Again, it looks like the CFO has a tendency to exercise its options, the 20,000 at a time. And right now, it's interesting, it has that same thing again, 525,000 shares total. So, but let's watch that, put on it as a candidate. Now, this company, OPCO, I've followed, I would say 12 years or so. And this interesting story with this, it is in a diagnostic and research. It was part of the, the pandemic big jump. It was when the numbers came, it was like the testing tools and other things. So it had a really nice ride, went from $1 change to almost $6. So what you look at, you see the insider transaction of 88%. The ownership, I have a little problem with that, and we shall see why. So it has been all over. I mean, it was $18, $19 stock in 2016 or 2015, and we are at $3.61. So let's take a look at what's happening here. You see tons of buys here, and you see that a lot of money being put into it. But what you see is, this is Philip Frost. This is his company. He loves it. And he's been doing this, as I said, I followed for 12 years or so. It gives you that false sense of security, thinking, oh my God, he believes in it. I should go and buy this. But then, it is really, it gives you heart attacks. So is this, like here, he was buying. Now, would I buy it? Well, I mean, it kept going down. I mean, this is 2 years, 3 years later, we go from $10 to under 2. So just be aware, again, they are in love with their own company and they constantly buy. You can see there's 100 and 150,000. The interesting thing was, we had a vice chairman, he bought 10 shares. But other than that, we also had the senior vice president who bought a big chunk at, 50,000 shares. But other than that, you see that the CEO and chairman owns about almost 195 million shares, and the float is 409 million. So, that's something I kind of stay away, because I want to see conviction from other people. And sometimes you see that the CEO loves it so much that you see turnover in their, let's say, their accounting departments, their CFOs, their vice presidents. So watch for that. Those are red flags. The last but not least, that's my 7+1. This is a weekly chart of MGM Grand, right? MGM Resorts. And as you can see, we are at $42. We hit above $50. But look what happened, and it was rightly so, when the pandemic hit. I don't know if you were back to Las Vegas right after the pandemic. I was there in May. It was a ghost town. I mean, the kids were riding their skateboards on the strip. So there was nothing going on. So this is what happened to MGM from $35 and went to under 10. It went to like $8, right? So at that time, I was looking at this and I'm like going, oh God, that's awful. I'm looking at the leisure companies and cruise lines and airlines. And this really piqued my interest. And I shared this, I think, in April or May of 2020 with our group. And I noticed, look, the chief financial officer on March 31st goes ahead and buys 8,271. The price was $12.08. On March 30th, he had also bought another 16,000 at $11.96. So now he's increasing his shares. And you can see there's more directors, and then we had the president is adding more, and these are all fresh buys. And I ignore these option exercises. Now we had, some redemption there, but you see right from in March 30th to April 9th, I see a big cluster of buyers, and they're pretty respectful as far as the buying. So basically that gave me comfort, even if I didn't want to own a lot of it. Although, it's from the sentiment point of view, most of like March 23rd, I went shopping. And then something like this gives me even more confidence to do that. So these are the times when things are really bad. I think the insider activity, especially buying, gives you a very clear and a good uh, uh, path as far as what the future is going to take. So with that in mind, I hope that was useful. I hope it was something that you can take advantage of. It could be a starting point. Sometimes it could be an ending point. But I've really found this to be very useful in my investing career. So with that in mind, we can stop the recording and open up for any questions. Thank you so much.